Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. In my last video I said that gold would outperform stocks and bonds. That was not the case, but gold has actually still risen and made an all-time high. Then it went back down, so that's why it didn't outperform stocks and bonds. But yeah, I'm a bit surprised that stocks and bonds did go up that much. But let's see what our data point is saying today. So we have the gold forecast index leading indicator, and we see that the data point is still negative. I had hoped that it would go up a bit, but it's still negative. So yeah, it's not that positive. This thing doesn't seem to be able to get back in the plus. So I expect gold not to shoot up that much. It's probably going to hover around 2000 now. We are currently at 2000 at the highs. It could go a bit higher, 2100, and then I think this is the neutral rate now. 2000 is now the neutral rate for gold. So don't expect huge moves to 2500 or 2400. It's not going to happen. So yeah, you can still be in gold miners. They are cheap. They are making money at 2000 gold. So yeah, I had hoped for a better data point. Still, the roll rate is still the same here. We did have some bad jobs data numbers, ADP. So I think unemployment rate could rise a bit more. Inflation is coming down. That's not good. So misery index will be flat. Yeah, that tells me that gold will be flat as well. Real output is improving, which is not good for gold. GLD, yeah, the funds are still not buying gold, still flat here. So we need the funds to start buying to get a more bullish trajectory for gold. It's not happening yet. So there's no GLD buying yet. There's also no COMEX build up yet. That's also not good for gold. I think it's going to be flat around 2000. Yeah, and LBMA is still going down. China demand is robust. It's flat, but it's not declining. So even at 2000 gold, there is still Chinese demand. And Indian demand was also very high last month. So that's good. SLV is not doing that much. So yeah, I don't expect silver to shoot up like to 30. It's not going to happen. There is no silver squeeze. You can see that from these numbers. Shanghai demand down, but yeah, this is pretty strong. COMEX numbers, yeah, total silver is still dropping. Yeah, I don't expect silver to do any big moves yet. US mint sales down, flat, so no real bullish signs there. Premiums are very low for silver, so there could even be a drop in silver. Same with the junk silver premiums, very low premiums, which means there could be downside risk. But of course, we also look at China, and China premiums are still high. So this tells me there is some upside in gold and even in silver. Shanghai silver premiums are also at a high level. So all the gold demand and silver demand is coming from China right now. So they are propping up the market. PSLV, I don't think there is a lot to say about that. The open interest is increasing for gold, so there is some interest coming in the gold space. But looking at the COT report, it's currently at neutral levels. So that's why I'm telling you 2000 is probably going to be the level where gold will stay for a few months at least. But it will be a new resistance, downside resistance. So that's good. Gold miners will make good money at that level. Lease rates were not that good. So if lease rates go down, that means you pay less interest for gold. So there's not a lot of interest for gold right now. We want lease rates to be high. So that's typically a bottom. Lease rates are now back down. So not a good sign with these low lease rates. Same for silver, very low lease rates. I could even see weakness coming from this. This is for short term. Swiss franc also dropping again. It's not looking good actually. This is still real yields, still negative. I mean positive, but this is an inverted chart. So, yeah, also not good. The only thing that's still good is the seasonality. We still have, we are in the beginning of December, so there's still some seasonality upside until February. So, yep, that's the only thing that's left. Other than that, I think it will be a flat month for gold. Yeah, and here as well, the gold miner sentiment is pretty high now. So this could be a topping pattern even. So watch out for this. There's too much bullishness now in gold. In the long term, I still think that gold should go higher. Going back to the mean. This is also looking good. This is rising very slowly, but it is rising. So there is some inflation going on. How to buy gold, Google Trends. What are we seeing there? Is the hurt already coming or not? Yeah, the interest is rising, so that's a good sign. That means that more people are starting to look at buying gold. So that's good. Debt is still rising, while GDP is not rising that much. We only had 1% increase when we look at the Atlanta Fed. So yeah, debt to GDP will rise. That's good for gold in the long term. And the forward spread, most important chart. We are, oh, this is very good. Very good. Minus 1.26. We are very inverted now. That means gold will go much higher. This is like a spring. The lower this goes, the higher gold will rise. And minus 1.26 is really good. As you can see here, the lower it goes, the higher the gold price will rise. And I want this to be very low. So we will have a much higher target for gold. Rate cuts, yeah, everyone is talking about rate cuts. I do think that they will start cutting rates. Not sure when, but maybe in May. But once that happens, gold will go up. And we can look at the 2-year yield, which is dropping. So more chance of a rate cut. Yeah, lately it went back up. So yeah, this is something we need to keep watching. Foreign gold deposits still rising, but at a slower pace. Bank term funding still very high, so the problems in the banking system are still there. So looks good. Looks good to go higher in gold. But my leading indicator is still not positive. Let's take a look at copper. Copper is bullish for the coming years. As you can see here, I do have a copper miner. Real economy index is still negative, not good for copper. But I think copper demand will still outstrip copper supply. As you can see here, inventories are still very low. China doesn't have any copper left, so they need to start buying. That will be bullish copper. See, the inventories compared to last year are following the same trajectory. Let's see how this ends up. Maybe it goes even lower. That would be bullish copper. China power consumption is still rising. That's a good sign. Credit impulse is flat, so I don't see a lot of movement in copper. It will probably be at 3.7. Next year, maybe it can go to 4. GDP was down a bit, but still rising. And yeah, the most important thing is the copper balance. So as you know, there will be a bit of surplus next year, right? Everyone is saying that there will be surplus next year, and then it will go to a deficit in 2025. But what they don't know, what they didn't know yet, is the problems with First Quantum. So First Quantum has shut down the Panama mine, and that's 1.5% of global supply, 300,000 tons. So 300,000 tons, that's this whole block here. So instead of a surplus, we could have a deficit next year due to that shutdown. So that's very positive for copper. So I hope that it will remain shut down forever, and then the other copper miners will boom. Scrap copper, it's still hovering around the 0 level, so I think copper will stay at 3.7. Seasonality looks good for December. Yeah, that's going to be flat, the copper concentrate imports. So nothing special to report for copper. Inflation is still flat but declining. But when you compare this to the history, we do have much lower inflation in 2008, even 2020. So this is actually pretty stable. 2.17 is not that bad. So keep watching this. If this starts to go below 0, then you should worry. But today, inflation is still very high. So we stay in gold and copper. This is an a very important chart. The Brave Butters Kelly Index with 490 indicators is going negative now. So that's the red chart, it's going negative. And whenever that happens, then you have maybe half a year or a year time to get out of the stock market. If this continues to go down, you will get an economic index that will drop. Okay, so this is a leading indicator. When it goes back up, then it goes up, goes back negative, then it goes back down. Here it went positive, and then the stock market went back up. Now we are going negative. So I expect the stock market to be weak next year. And this red line is telling you that. Now, of course, this red line can still move back up, but if this trend continues down, then watch out. That would mean gold is the best place to be. Housing market index was down again, so that's also a sign that bad things are going to come. Hong Kong housing market was down, so that's also not good. So we have some positives for copper, also negatives for copper. But overall, I'm bullish for the coming years. On to the central banks. They are still doing well, actually not in Europe. In Europe, they are doing QE again. But in the USA, they are still doing QT. Maybe not as much. It's flattening out a bit. So maybe they're going to go back to QE. I have heard some rumors that QE is coming back. That would be good for gold and stocks and bad for the dollar. So yeah, gold is looking good. Money supply is rising again. Interesting. Base money is rising again. That's good for gold. Deficits. Let's go over the deficits. The deficit increased. Goods deficit increased. But the services are still good. Still rising with a surplus. But overall, we have seen larger deficits in the last month. This chart here keeps on dropping, so I expect deficits to increase and drop more. Import and export air freights stable. Export prices went down more, so that means we have higher deficits. Export price index both down, but exports down more, so higher deficits. Imports and exports, yeah, that's Q3. And here I expect that the trade balance will go into more deficits, so that's bad for the dollar. So I expect the dollar to be weak going forward. Then rate cuts. Rate cuts are coming next year. Whether you like it or not, everyone is suggesting that there will be rate cuts. And that's good for gold. Okay, so position yourself in gold miners. Rate cuts are coming. So these are the trajectories. Who will cut first? Europe will cut first. UK will cut first. Canada will cut first. So look for these three: UK, Euro, and Canada. If they start cutting, then the US will also cut. So watch the news next year. Capacity utilization still high, but it's dropping a bit to 79. So nothing special to report here. Maybe a bit less inflation due to lower capacity utilization. Oil is going lower, and actually I like this chart really much from Kemp Energy. This was a chart from November, okay? So in November, this chart has actually forecasted that oil would go down. And this is a chart from now. So here, that chart had forecasted that oil would go down. And that's exactly what has happened. 1 month later, the oil price has gone down. So I'm starting to use this chart to forecast the oil price. Just look where the forward curve is going, and you will know what oil will do. This is based on contango and backwardation. We are now going into contango, and that's actually bearish. If you go from backwardation to contango, that means we are getting more bearish. So yeah, at some point, that contango will start to move back in backwardation, and that's when oil will start moving up again. So watch this curve, and you will know what oil is going to do. Now oil is going down, so what will OPEC do? They will probably cut production. So this is going to go down, I think by 2 million barrels per day. So from here to here. And as you can see on this chart, if that happens, then gold shoots up. So this is the top, this is the bottom. This will come down because oil is coming down, so they need to cut more production, and then gold will rise and make new highs. So that's my thesis. I want to see oil go down much more, and then they will cut it and gold will rise. So that's very interesting. That will be good for gold miners because lower oil price, that's less costs, and gold will be higher, so more revenues. This we already talked about, copper supply going down, and this is our target for gold. In about 10 years, we should see 5,000 gold, if you believe this chart. So more than a double. I think that's a good return to stay in gold. And that double can actually become a 10x if you buy gold miners that have 5 times leverage. For example, Soma Gold, Monument Mining, Trigon Metals for silver. There are others, Artemis Gold, Aura Minerals, Aris Mining. So all have very high leverage to the gold price. And this is the Gauss curve. I think gold could be between 2,000 and 5,000 in the coming years. So only up, not down. 2,000 is the floor. So it's looking very good. Sprott Inc. Let's end it with that. They had an update on their holdings. So what did they do? They sold Endeavour Silver. They don't have Endeavour Silver anymore. I said that this was not a good silver mine. Too high capex. Vizsla Silver actually also sold. So not good. Yeah, I don't know what Vizsla Silver is doing. They do have some silver, high grades, but yeah, sold by Eric Sprott. company. What did they buy? Kinross Gold, that's actually a very good one. Gatos Silver, also a very good one. Yeah, Pan American, I don't like it, but it has good margins. Some uranium miners as well. Fortuna Silver, also good. Yep. And which are the worst ones? I-80 Gold, sold a lot of that. Osisko Gold Royalties also down. Silvercrest Metals down a bit. So this one doesn't have a lot of leverage, Silvercrest Metals. I don't like that. Alamos Gold, also no leverage, overvalued, so also decreased the holdings. Elo Copper has had a very poor performance, but actually this is one of the cheaper copper mines. Elo Copper is actually good, but Trigon Metals is of course much better. B2 Gold overvalued, Oil Mining overvalued, Max Silver overvalued, all going down. So you can see that here holdings are going down in value. Equinox Gold, too much debt. New Gold, too much debt, too high costs. All of the bad mines here in the negative. So yeah, choose your miner. The outlook for gold is flat, I think, for this month. But in the long term, this is going much higher. And that was the update. I'll see you in the next video. Bye.